Greetings and welcome to the UGE International Planet MicroCap Virtual Investor Conference. It is now my pleasure to introduce your host, CEO Nick Blitterswyk. Thank you. You may begin.
Thank you very much, and good morning, everyone, and happy Earth Day, and thanks for tuning in to the UGE corporate presentation. I'll start off by saying, we're a commercial solar developer and EPC. So on this first slide, what is a turnkey commercial solar? We break it down into these three separate parts of our business. So first is the project development. This is probably the most underappreciated aspect of our industry, but also the most difficult and where a lot of our expertise lies. So this is finding projects, originating them, and bringing them up to the point of construction. And I'll go through what the development looks like a bit later. Number two is building, engineering, and managing the build-out of these projects. And then number three is the financing of them, the owning, operating, and long term. So we're a complete turnkey provider. In terms of where we do this, we've had quite a bit of history in the Canadian market. Right now, our biggest market is in the U.S., especially in the Northeast U.S., where we're very active. And we also have a business overseas in the Philippines as well. And in terms of what we do best and how we stand out, so it really comes down to having this turnkey, complete turnkey platform within this commercial solar space. There's very few companies in our industry that can develop the projects, build the projects, and then finance and own the projects. We've been putting this platform in place over the last several years, and very excited about how it's all come together here in the last year or so, and what that means for our future. Number two is we only focus on markets where we can be a top two players. We're very focused on markets that we're good in, that we know extremely well. This is still quite a fragmented market, and within the markets that we're in, we have very high market share. So Greater New York City area is one market that's the bulk of our backlog right now, but other areas up the north east here of the U.S. as well. We have a very long history, a very long track record. It's more than 600 projects. I think we're actually very close to 700 now, and about 400 megawatts of total experience. So in terms of the history of UGE, just briefly, the company is about 10 years old. The first 4 years of the company's history, it was really a completely different industry at that point in time. Now, we all know about how much solar costs have come down and how much this industry has changed. But at that point in time, it was really a cottage industry, and we were bringing together systems for different corporate clients and other types of clients really around the world. So we've got a lot of really good experience, but as the industry matured, it was our chance to make this into something more substantial. So the middle phases of our company went public on the TSX-V in 2014. We had a wind business as well that we sold off, and then we built out the rest of the platform through two acquisitions of companies that engineered and built projects in the mid-scale commercial solar space. Now we really see ourselves as in the third phase of this company. We're trying to finance our own projects. We financed our first, probably about 10 or so over the last 8 months that are in various stages of construction and completion. We've really finished out this complete turnkey platform, and we've gotten to a point where the projects that we're moving through right now have all aspects of the development cycle. So we're developing and building them and financing them as well. And that's really important in terms of, well, I think number one, how well you do it in this industry, but the number two is just how much value and how much margin you get out of the projects as you do so. Just briefly in terms of the industry, so number one is, solar's become a very substantial part of our energy mix. So for the last few years, solar has been about 40% of all new energy in the U.S. built each year, so a very substantial portion of the overall industry. And the reason, of course, is that solar has become very, very economic. So I like to, point out from the first time that we bought panels about 10 years ago to now, the price of panels have dropped by over 90%. So solar has become very cost effective, and that's really leading to a lot of growth. The commercial solar space that we focus on is in many ways the most underdeveloped aspect of solar. So one of the reasons that we're very excited about where the company goes from here is just how fast this industry is growing. So in the last 10 years, the commercial solar space has grown about 8x, but still it's about 1% or less than 1% market penetration from what we estimate is the addressable market in this industry. I'm taking one market as an example. I mentioned earlier that New York City is a specific area of ours That's where the company was originally founded. We estimate that the greater New York City area, for the type of project that we do, is probably around about $1 billion market this decade. So very large, and yet it's very early going. Just so far in the New York market, somewhere in the low tens of millions worth of projects have been built so far. So still very early on. And like I said, this is really all being driven by the cost of solar and how cost competitive it has become. Really over the last, depending on what market you're in, but kind of 2 to 4 years, solar has gotten past this point of grid parity, where it simply provides a more economic source of energy than the grid. Now, of course, that varies based on your grid price and solar resource and everything else, but as a couple examples of the markets we're in, in New York, it's a community solar market. I'll explain what that means on the next slide, but in essence, we just rent your rooftop from you. If you have a warehouse or a shopping mall or anything with a big, large roof, we'll pay you about $1 per square foot, give or take, and we take the energy and sell that to the grid at a discount. So customers save money buying that energy as well. In New Jersey, an example, it's about a 33% savings, sometimes 40% or more off their grid rates, depending on where you are. So, in both cases, our customers save quite substantially. Now, in terms of the types of projects that we do, earlier I mentioned that we're a commercial solar developer. So touching briefly on what that means, I think a lot of people that aren't in the industry expect that the way commercial solar works is that a business contacts us and says, I want to put solar on your rooftop, on our rooftop. And simply that's not the way it is. And instead, or maybe that's less than 10% of the cases. But for the most part, we are developing projects by identifying good opportunities that are going to result in a project that generates good returns. So in the energy industry, you could think about if you were, thinking about generating or building a large power plant, or sometimes we give an example of like the real estate market and identifying, where you think a hotel is going to generate good returns. So in the solar space, we're saying, okay, right now in the Con Edison territory around New York, that's a very good market, and so we're looking to lock down rooftop, lock down large parking lots, things like that, where we can install solar and generate a good return. So what this means for a real estate owner in New York is that we're contacting you and just looking to rent your roof space from you. When we do that, we then sell the energy, again, into the grid, which is really into these community solar programs, and energy users throughout the community, they save money, usually about 10% on their bill as well. So it's a win-win both for the building owner who's getting a rent and the energy user who's getting a discount. Now, in other markets, what we could do is, similarly, we'll say, in New Jersey, the cost of energy from a solar system is a lot less than the grid. So we'll say, hey, we'll put solar on your rooftop and sell you the energy at a discount. That was probably the main driver of commercial solar over the last 5 years, but community solar, the type in New York and other states, has really started to grow more substantially for us lately. And we're a real leader in that type of product. So we were the first ones to develop a community solar project in New York, one of the first, if not the first, in Maine, and so it's the market we're very excited about. And of course, like what this means from the client's perspective, number one, no capital investment. We are going to you and saying, hey, this is how we can either put money in your pocket or save you money on your energy. There's immediate benefit once the system's built, and no hassle. So UGE controls 100% of the project life cycle. Like I said, we're a complete turnkey developer, and that's really important within this space. And of course, everything going on today with COVID-19, I think it's an important point to mention as well, that we expect that during a downturn in the economy, our business will actually thrive because businesses, of course, will be looking for new sources of revenue and also ways to shave costs. And so, why wouldn't they go forward with us? And we're actually already seeing a really big uptick in sales. And just in the last month, we've announced 5 new deals. So we're looking to benefit despite all the pain, of course, around us. And of course, a good opportunity to say, hope everyone's safe and healthy. In terms of the types of projects that we do, this is just 3 examples. Like I said earlier, we've done over 600 projects, but the first one is the largest church in the Northeast U.S. This is in Brooklyn, New York, and this was the type where the church is actually buying the energy at a discount to their grid rate. The middle one is the largest bottled water company in the Philippines, an example of a type of like large corporate client where we've built many projects for them. So we've built 4 for them so far and hoping for many more. And the third one, called Madison Development, this is a real estate ownership group, a real estate developer in the greater New York region, doing a lot of like logistics facilities and so on. Of course, we all know that the Amazons and the likes are growing very quickly right now. So this customer, this was the first client that we built a community solar project with in the New York area. And since then, we've completed, I think, 3 projects, and we have many, many more under development with them as well. So just a brief example of the types of projects that we do. I want to go into a little bit in terms of like how commercial solar companies generate revenue. And for anybody who's been following the UGE story for a while, will know that this plays into our history as well. So the first one, EPC revenue, shown here. So this right here is, EPC stands for Engineer, Procure, Construct. Typically what this is building a project for another developer. So a developer who's out there sourcing projects hires an EPC to build the project, and that's the only role you play. It's the middle third of this industry. So in that way, the margins, of course, are the lowest because you're only playing part of the role, and you often get squeezed. You're just a service provider, and you're only doing part of that. So, you know, we had a good portion of EPC revenue, and I'll come back to this in a few slides as well, in 2017 and 2018, and that's because we bought a couple EPC companies primarily for their expertise in terms of the engineering and project management of projects, but a lot of revenue came with those as well. With lower margin revenue, and by the end of 2018, we had decided, okay, we don't want to focus on this, and so 2019 our revenue dropped as we said, no thanks to EPC revenue. The other two that we focus on though, and that's 100% of our revenue in Q4 and going forward, is when you develop the projects yourself. And there's 2 different types here. I'll go through them briefly. The first one is develop, build, and sell the project to somebody else. So there's a lot of funds out there looking to acquire projects in this space, or sometimes you work with a client, Con Edison, for example, is one of our clients on the real estate side that want to finance it themselves. So here you start getting better margins, estimated in here of 20 to 23%, but it's a develop, build, and sell. So all of your revenue is earned up until the point of the project being completed. But the biggest part of our growth story right now is that we finally built out the full platform to a point where we're developing, building, and financing these projects to own as well. And so in I guess with Q4 of last year is when we started financing our first projects. You know, I mentioned earlier that there's about 10 projects in total that were in various stages of completion or construction that we're financing for our own book. But in this case, the gross margins are the highest out of the 3, and also generate a recurring revenue stream as well. So our projects most typically have a 25-year lifetime, and so this starts building up a really good asset base for the company as well. And we really see this as a future of our company. And I'll come back to the backlog later in terms of how that looks. Just briefly in terms of like how this plays out. So, you know, in the before case, this is, you know, here you see $770K cost to build. That's what you would get paid if you were just the EPC on this project. You know, if you're selling it to a fund, in this case, it's about $1 million value of project sale, and there's that 23% gross margin. But when you start to structure the financing yourself, you are able to, you know, structure the financing, take out a developer fee, and then earn revenue over the 25-year lifetime of the project. And so this is something that we've just been doing for the last 6 to 9 months, and what we really see as the future and bulk of our projects going forward. Just in terms of a very brief intro to structured finance. So of course the capital sources, the way we structure them, we bring in non-recourse project level debt. There's various incentives depending on what stage you're in, and tax equity. So there's a tax credit in the US, and so you bring in a third-party investor to monetize the tax equity, and that's how you pay for the project. Now the sources, and so the uses, now we build the project as EPC. There's a developer margin that's extracted by the developer, UGE in this case, and then there's various administrative costs with structuring the project. So this is very briefly, and I will say that the investor presentation is available on our website, but this gives you a quick little rundown. So in this same case, we're able to extract a pretty similar amount of capital out of the project at completion, but then we also capture an attractive IRR over the project lifetime as well. Now, one of the things that we're really excited about as we've been building out our backlog, as we've been past the point of that EPC revenue that I had talked about, is just how much our backlog is growing. So we announced earlier this month that our backlog had exceeded 45 million. Here's a quick snapshot of what the backlog looks like currently, and as you can tell, it's about 47 million USD right now. The pipeline here, the backlog here also is broken down into the different types of projects that we do. So whether it's client finance or UGE finance, and in what market that we're in. So you can see that especially in the committed projects, UGE financed about 25 million. That's about half our backlog right now. And so this is the fastest growing area of our business and what we'll be focused on for this year and next. Now, in terms of just our financials, I'll go over very briefly. We actually release our year-end 2019 results next week, so those aren't out yet. But you see, in terms of 2015 to 2018, we had that big bulk of orange EPC revenue, which at the end of 2018, or mid-2018, we had decided that we were going to run off the rest of that business and not go after that anymore. So our 2019 revenue dropped quite significantly as a result, but at the same time, we also cut overhead. Our margins improved more than double over the prior year, and there was a lot of things underneath the surface that showed a good track record for a profitable future. And so really in 2020 and beyond, we're focused on keeping those margins high. As I mentioned, our overhead costs have come down quite significantly with that change in the business as well. And now, of course, financing the projects ourselves, growing the recurring revenues, and executing on this backlog. Of course, we're out there, we're very active in the market to win additional projects as well. But just based on the backlog we have, we're confident that that will result in a profitable future for the company. In terms of milestones and where we're at, some of the things that we've been focused on is first that transition over to self-developed projects, and we saw that happen. And now for 2020, getting back first on a quarterly basis to positive EBITDA results, and we're confident that we have the projects to do that this year. COVID be damned, and then continue to grow this backlog, which is already just under 50 million. So we'll be over that milestone here soon. And actually recently we announced our largest U.S. project ever, and that one by itself actually was a bit over 10 million. So we could check off that last box as well. I won't spend any time on the team. I founded the company about 10 years ago, and everyone on this slide is with us for, in our CFO's case, a bit over a year, everyone else's case over 5 years. So very committed team that's been in the industry for a long time. And then lastly here, in terms of the fundamentals of the company. So because of that turnaround, as we downsize the Canadian market and the results that came with that during that period of time, our stock had sold off quite a bit up until kind of mid-2019. We've been trading fairly well this year, even throughout the COVID pandemic, but still our market cap's only about 6.5 Canadian or under 5 US. Draw attention again to our backlog being in Canadian dollars here, well over $60 million. So I think we're of course quite undervalued in that sense. Only about 24 million shares outstanding. We have very high insider ownership at about 55%, and just very much focused on having a successful future for the company here. And yeah, just to recap, so we are an emerging market leader in what is a fast-growing sector. Like I talked about, we really only focus on the markets that we can be top 2 in, and just in those markets quite substantially. Significant growth ahead. Here it says targeting at least 40% growth. We really want to manage expectations, but at the same time, you could tell by our backlog that the numbers are there for us to grow much more significantly than that. And then lastly, I think we have a very clear vision for success in terms of what we're focused on and where we're headed here. It took us a while to build together the full platform that we put in place, and we feel it's there now. It's already having very good results for us with a lot of repeat clientele, and we're looking forward to putting all these projects on roofs and in the ground and generating very strong results along the way. So thanks again for tuning in today. Any questions anytime, feel free to reach out on our investors page on our website, UGEI.com. You can subscribe to our newsletter or submit any questions. So thanks again.
This concludes today's webcast. You may disconnect at this time. Thank you for your participation and have a great day.